Hey, welcome back to POA for You. It's Leroy again, and today we are going to go through O Levels 2021, Paper 1, Question 3. The topic is on trial balance and correction of errors. Now, for those of you who have just found this channel, welcome and thank you. And for all of you who may have a friend who you think could benefit from this video, please share it with them. It's a free content for everyone. Now, without further ado, let's jump in to see what we have for today. Let's go. Alright, let's see what we got here. Celine has told us that she's got some errors in the end of the year during book closing, and requirement A has asked us to prepare a journal entry to correct the error number 1. Let's look at error number 1. So error number 1 tells us that equipment 5,400 were purchased on credit from Bernardo had been recorded as 4,005 instead. So the recording of the entry in terms of debiting the account and crediting the account is correct, but it's just the number that was entered was wrong. That's all, right? So just prepare the journal entry to correct this. So I'm going to move my face down and I'm going to show you the journal entries that I've prepared here. Okay, so it's debit equipment and credit trade payables of $900, and $900 is the difference. Now, why did I debit equipment and credit trade payables? So I did that because when an asset, equipment is an asset, and assets debit in nature, and when we buy an equipment, it means that we have more of the asset, and we have, if you want that asset to increase because you got more of it, then it being debit in nature, you would debit that account. And trade payables, similarly, it's credit in nature. It's a liability, like all liabilities are credit in nature. And because you bought something on credit, it means that you've owed Bernardo more as a result of this transaction. And if you want to signify that you owe more of trade payables, then you have to credit it because it's credit in nature. Now, I've got a video on journal entries. If whatever I've explained to you doesn't really make sense and you need more explanation on that, go search my channel. I think it's under journal entries under POA concepts, and you should get some information on that. Any questions, do let me know. All right, let's move on. Depreciation of, let's move on to part B actually. So part B says that for errors 2, 3 and 4, what is the effect on profit before the corrections are made, whether it's overstated, understated or no effects, right? So I've copied this table right up to here. Okay, and then we can look at the question and answers side by side each other, right? So depreciation expense on an equipment had been understated by $60. Now, depreciation is an expense, and if you look at the profit or the statement of financial performance, right, it starts with revenues, and then you less all your expenses. And depreciation is one of the expenses, and then you'll get profit or loss. So if your expense were under or lower or under recorded or understated, then your profits will be artificially overstated, right? So I put here overstated by 60. And let me just show you in this let me just bring this up as well. So if you look at this example, I got a sales revenue, and this is a statement of financial performance, something that I've just put quickly together. $1,000 is your sales revenue, you less cost, you get your gross profit, then you less other expense. Depreciation sits in here, right? Now this depreciation of $100 adds up to a total expense of $300 and gives you a profit of $100, being, the 400 of gross profits less expenses, right? Now, if I say that this is understated by 60, so I'm going to add 60 to this, okay? Add 60 to this, and just take a look at the profit number here. It will now go down. So before I did the correction, when depreciation was understated by 60, then profits would have been overstated by 60 as well. Okay, going to error 3. Error 3 says we purchased from Lucinda $890 and we posted it to Belinda's account instead. Now, the key to actually these kind of questions is to understand whether each of these transactions will give you journal entries that will be posted to the statement of financial performance. Now, I've put in what the incorrect journal entries would be for error number 3. if you bought something from Lucinda, and I'm assuming inventory here, and if you had posted it to Belinda's account, then you would have debited you would have debited inventory and credited trade payables to Belinda's account. Now this part is wrong. You should have credited trade payables Lucinda instead. Now if you notice, these two accounts, and particularly the one that is incorrect, is a account that goes to the statement of financial position, not the statement of financial performance. So if it doesn't go to the statement of financial performance, then this error would make no difference to the computation of profits. So therefore, my answer for this would be no effect. Okay, let's look at the next one. Error number 4. Error number 4 says fuel for Celine's private vehicle had been recorded as motor vehicle expense of the business. Now we know that if Celine has bought something using the company's funds for her own purpose, then we cannot consider it as a company expense, and it should be put to the drawings account, right? So let's look at the journal entries for a moment. I am going to do this. Let's see what I prepared here. So the incorrect journal for this was they debited motor vehicle expense account and credited cash at bank. Now they should have debited drawings and credited cash at bank instead. So you would see that this incorrect journal, this is not correction journal, this is the correct journal. Okay, so this was wrong, right? And motor vehicle expense actually impacts the statement of financial performance. So which means that if your expenses are overstated, too high, then when you calculate your profit then your profits will be too low because the expense are overstated. Okay, so remember the table of I'm going to pull it out, that profit and loss table that I showed you here. Okay, this time round the expense is too high. So for example, this is motor vehicle expense and this was too high by 75. Then if I bring it down by 75, because this 75 is not the business expense but it's drawings that goes into the statement of financial position, then if I less it off, then my profits will go up by $75 as well. Okay, all right, so let's go back to this. I would have put understated here. Now, part C, let's go to part C, and they've asked us to explain accounting theory. You could Google this as well. Just put accounting theory, POA, and you get the answer. But basically, it says that the business and the owners are separate legal entities. So costs incurred, like the example of the error number 4, by the owner for the personal purpose should not be accounted for as a business expense. Okay, and that's why this was an error. Okay, so that's it. Thanks very much for your time. And guys, if you have any questions, just feel free, send me your questions and I'll be happy to answer them. If you have a friend who you know that will benefit from this video, share this free resource to everybody. Okay, all right, take care and see you soon.